everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. Gold, silver, historical wealth insurance, something that has historically protected purchasing power against massive central bank inflation, crashes, crises. Constantly throughout history for thousands of years, we've seen gold and silver come to the rescue as long as the market and the currency system is free and decentralized. Now, John, today we're going to go into something that, once again, like we've done in recent days, we're going to be talking about something that we have reported on in the past. However, it was so many years ago that I think it's good that we do another revamp of this report with the knowledge that we've been able to attain over the years since we did the last one, which is on the gold-silver ratio and what it means. So first of all, John, just go into it. What does the gold-silver ratio show you? Like, go into what you've got here.
Well, the gold-silver ratio over history and time, usually what it has been showing, especially over the last 100 years, it's been showing usually that something is going on with the economy when the ratio is very high. So like, let's say currently it's only been in the 30s and 40s that it was really high. The ratio between gold and silver, it was up there in the 90s. It was really high up there again, and then currently it's just seemed to find a floor. If you look at the actual chart here since about 2003, it seemed to find a floor about 80 that'll hit at the peak around 80 before it collapses down. But
well, explain those numbers, the 20 to or the 0 to 100 there on that chart.
Yeah, so the 0 to 100 is the actual ratio. So how much silver units can go by. That's basically what it means. It means that you have, let's say, you can actually buy 100 silver units for gold at one point because silver is so devalued. Now, on the flip side of it, if you look at, for example, let's go down here, Josh, and take a look at in the 70s, like when gold and silver really went through the roof, you are seeing a ratio that dropped very far down. It dropped about 10 or even lower at the peak because it was a frenzy to run into gold and silver. And of course, when this happened, is people first start buying gold. And then, of course, most people that are down there, when they start to see and panic and wanting some safety and some wealth security, they go in and buy silver. Physical silver, because it's, gold is the metal of the kings and the queens.
Yeah, we saw similar things.
Silver.
Yeah, we saw similar things in the Klondike Gold Rush in the 1800s as well. I mean, it seems like there is definitely a trade back and forth. There's a bit of a pendulum effect that goes on.
Yeah, it is, and what happens is usually at the peak, and this is very interesting. So this is where the silver-gold ratio is becoming very interesting when you actually put on the grays. If you see the grays on the screen here, you'll see that those are the recessions, the official recessions. And what you'll see is, during recessions, they'll peak out. Like the gold-silver ratio will be at its max, where it takes the most amount of silver to buy an ounce of gold. So what you see over the years, peaks out throughout any recessions that you have. Most of them, almost I would say 80% of or even 85% of these recessions there, Josh, it was peaking either right before or during the recession. So you can see the ratio goes to a maximum and then it plummets. And that's a good thing, because now what that'll tell you is actually silver skyrockets in value compared to gold during that time. And that's what you saw in 2007, of course, the Great Recession, which is really the continuous depression, because they've been printing so much currency just to try to prop it up without really fixing the underlying issues of mass amounts of debt and so on. But what you saw, for example, in recent times, you saw a jump from about 79, almost 80, all the way down to about 31. So now the gold-silver ratio was a lot lower, And that means that silver has gained a lot more value than gold. And if you keep on, you can actually trade this. I know Mike Maloney is talking about this ratio, how you can actually, at the peak, you buy mass amounts of silver, and then as the ratio goes down again, well, now you just buy gold again and trade in your silver. So you're trading to gain more and more precious metal.
No, that's not, of course, that's our opinion, not advice, because, I mean, the thing is, we've seen so much manipulation in gold and silver over the years. And I mean, while we do see this continuing trend, we also have to remember that we've got banks around the world, these paper ETFs, these IOUs, this crazy derivatives market, this bubble that's ready to burst. We have all these bankers like Deutsche Bank, manipulating the price of gold and silver, among many other banks. It's like a beach ball underwater, like I've said so many times before here at WAM. They force that beach ball underwater, it gains pressure, and eventually it's going to bounce up. And I wanted to go into that a bit with you, John, because we have historically, we've seen, this manipulation of gold and silver. We saw what happened with the ESF and when the gold was seized from the people under FDR and was used to actually prop up the ESF funded, and then later on the IMF.
Yeah,
and we've seen a lot of manipulation over the years. This idea that these central banks create a gold standard, and that gold standard, they print out more paper than they got gold, and then they end up with vast amounts of debt and inflation too.
Away from the standard. That's what happened in 71. The United States defaulted on their gold standard. The currency actually, I would dare to say that the US dollar really ceased to exist, and a new US dollar that was unbacked came into being.
Yeah, it's like looking at the Argentinian peso fail a million times, and they just keep calling it the peso. But I mean, with that said, John, like I mentioned, the beach ball effect happening. What does the current gold-silver ratio tell us about the future of gold, the gold markets and the silver markets?
Well, what it's currently telling us is that new record highs over the last. If you go back, you gotta actually have to go back all the way till about November 1996. But this was after the big crash in the 90s, of course, where the silver gold ratio was at a record high, and probably one of the history's highest at about 96.6. So it was pretty much at the max. But you can see that happen also through after the Great Depression. They had throughout the war, actually, when you look at it, Josh, it happened throughout the wartime. And let's go and look at here. Yeah, you can see in the 40s, and then it stayed really high during the war as well. So what you're seeing is with this trade is basically, and you're talking about the manipulation of the precious metal markets. Well, look at all the contracts, for example, that COMEX is issuing on both gold and silver. Now, I know most about gold because that's what I looked into. Currently you're looking at almost between 500 to 1,000 contracts that are getting sold on the COMEX. Unallocated and allocated is two different things. So unallocated means that you just have claim on a pile of gold in that the COMEX holds in their vaults. But allocated means that you actually have claim on a physical bar that's in at the vault. So it's a huge difference. So most of them are unallocated, where basically it's first come first serve, Josh, to actually claim the metal. And this is one of the biggest things that you probably will see when the suppression of the gold and silver price will really start to take off, is if you get a default in that paper market, which is so fake. You're looking at them selling between 1,000 to 500 contracts per physical metal in circulation. It's a massive Ponzi scheme beyond comprehension. You look at that. Like, if I were to we could actually do this because I have a whole bunch of silver and gold at home. I'm just gonna print up 1,000 contracts on my physical metal. I can make a lot of money on that. Think about that. That's a massive, huge Ponzi scheme.
What's funny is that it would make more sense to trust you than a bank, but of course people trust banks. It's totally
trust me. Anyways, anybody that would print paper claims on any currency, I wouldn't trust them anyway. So hopefully I would never do that. I wouldn't trust myself at that point.
Really greedy. Ooh, lots of money. And with the current gold silver ratio, like you're going to go into what it means for the future, but we got a lot of investors that are very bearish on gold right now, and a lot of people believe that this is a sign that we are going to see a big rally in the future, in the near future, really. And we've got this gold-silver ratio at its at this current moment at what you mentioned was kind of like the wall, and it seems to show that silver is more undervalued than anything in this whole equation. I mean, compared to gold, gold is undervalued, but silver is massively undervalued. What do you think?
Oh, 100% it's massively undervalued. If you take a look at the actual historical ratio throughout time, all the way from the 1700s to 1800s, there's been different claims on different, what was the standard, but they had what was called the bimetallism, where you had gold and silver in circulation in the coinage, so it was just the ratio of the gold versus the silver, and then silver was of course more abundant in the currency supply because it took a lot less to print the coinage. So of course silver was a lot more abundant, but it was a ratio to between 1 to 16 was the ratio, 1 to 15, 1 to 17. There's a little bit of differences when you talk about the ratio. I believe also Sir Isaac Newton at one time was mentioning the gold-silver ratio, what he believed. And I believe it was 1 to 15. I don't claim me on that, but that's what people have said that are talking about history. And of course, who knows about what was said or claimed throughout history.
Lots of revisionism.
Yeah, unless actually he wrote it himself. It's from his physical book that he actually wrote about this. But anyways, that's the ratio. And I want to also point out another thing on top of that is gold is, if you have a gold mine that's primary mine gold, like they mine gold at that mine, very little else, you might get some silver as a byproduct. Silver is actually a byproduct of mining. There's very few, I think it's only First Majestic that have a pure silver mining operation that they have. Most of them comes from zinc and other metals that they have the silver as a bimetal product from the mining. So it's not even the major focus on mining silver. But silver is a little bit different from gold as well in today's modern history, because in the old days, they used to have gold and silver just as currency mostly. Now today, of course, with technology, you have gold is a little bit used, but silver is way more used in technology. You're looking at solar panels and everything else, all our phones and so on. There's so much silver that is being used versus gold, and also the total supply of silver that's in the crust versus the gold. It's a lot less. They believe that about 95 to 96% of all the silver that was in existence have been mined from the Earth's crust. So it's becoming less abundant metal in the Earth, and it's harder to get to. Meanwhile, we're getting more and more into producing more and more of our electronics and devices that need the silver to operate in the circuitry and so on.
So for the market to innovate a bit on that one, because that doesn't sound very good for the future. And I mean, at the same time, John, we have to focus on what brings gold and silver value. And this is something that gets confused often. I believe it's based in subjective value. Some people say it's physicality, but I believe the subjective value of man, because a monkey isn't going to feel the same of gold as humans will. It's scarcity, application use, and demand, and physicality can play into the application use of that. Its use case, what you can use that gold for, is application use. Scarcity is really important because it takes a supernova to create gold, and if you artificially create gold, it costs you more money to create it artificially than it does what your return is going to be on that. So it's pointless. It's not a good investment at all. It's more of just a science experiment at that point. But again, there's scarcity. There's such a vast scarcity of gold, of silver, that it brings the value up of that metal. And when you look at the jewelry that's used, when you look at the electronics that use it, I mean, silver and gold both have a very high demand for that reason, based on their application use and scarcity. So that is subjective value based on individuals looking at something, deciding what its use is, deciding how much of it there is, and then the demand of the individuals on top of that. Because of course, demand also plays into it, because because you can go to some African continents long ago, and while the white colonists came in there and loved the pearls and all that kind of stuff, the Africans would give away the pearls for almost nothing, thinking that it's not really worth anything. So it's subjective value, exactly. So John, continue. We got quite a bit still to kind of get into. So can you explain it?
Well, I'm just going to go quickly into the actual supply again, and as you see here, there's the scrap supply of silver is deteriorating since 2014, and also if you go and look at the numbers, I'm using Mike Maloney, which is one of my favorite authors and experts on the gold and silver market.
Someone we've interviewed, by the way. Make sure to check out that interview after this.
Yeah, he's a great guy. He also, you should check out The Hidden Secrets of Money, where he lays out in great detail the modern day monetary system and how it works, and also the history of it with gold and silver precious that we're talking about. But he's also saying that the actual supply peaked around 1.01 billion ounces of silver in 2014 and has been slowly on a decline. So there's we reached the actual end of it, where there's less and less supply available, it seems like, unless you got technology. Who knows if we can get more out of the soil somehow, or how it would happen. It could happen, of course, but there's less and less innovation that are able to take and extract more from the Earth's crust, of course. Now, when you take a look at what's happening with the gold and the rest of the economy, gold has been throughout history, and this is where it comes in, where it's very important to history, where it actually protected ever since the creation of paper money or debasement of currency, since the Greeks invented it in about 400 BC. It was protecting of wealth. It was a wealth protection unit, because it's hard to, over, let's say, 30, 40 years, to protect your wealth in anything that we eat or commodities and so on, because it will deteriorate. Gold and silver especially gold, does never almost deteriorate ever, and it's just in its gold form. It might be a little bit of dirt and stuff that comes onto it, but it'll actually, if you clean it off, it'll be completely nice looking. It won't oxidize and so on. It's a very impressive precious metal, and together with palladium and platinum and so on as well, together with silver, those are the precious metals that are out there that have that malleability, and I guess that what throughout history, of course, made it available for trade, because they could create it into units and then measure those units and then say, let's use this as a medium of exchange, because it's easy. We could push give it forth and back. But now with technology coming in, it's interesting. That comes back to subjective value again. And that will bring me actually back, before I'm going to talk about that, bring me back to about the I believe it was the 1700, when the Spanish galleons, went and raided the Aztecs, and they took they found mass silver and gold supply, especially silver, and they brought that back over to Spain. And what happened, they thought it would enrich everybody, but the problem was that now suddenly the gold and silver had lost a lot of its value, because it was supply and demand. It was a simple supply and demand, where suddenly there was so much more into circulation that it dropped in value. So it didn't enrich everybody that the elites at the time believed it would. It actually went the opposite way. So you can see how people look at different things as valuable. That's a number one thing here to bring out of this is, it doesn't really matter, as you said, when people went to Africa, they just took the pearls. They're Europeans. They didn't care about them for value, but they had their own valuable things that they seemed as valuable to trade and as a currency.
Yeah, absolutely. So let's kind of wrap this video up. We talked about the gold-silver ratio. We should talk a little bit about the future of gold and silver, though, and what you expect. So in closing, John, what do you expect in the near future for gold and silver?
Well, we have our currencies starting to fail. Now we're looking at the emerging markets currently, and you're seeing what's happening there is currency upon currency is failing because they got mass amounts of debt. They racked up a whole bunch of debt. Debt was very cheap. They borrowed a whole bunch of US dollars, and then suddenly the US dollar became more expensive to borrow versus their currencies. And then, of course, their debt was more expensive to pay back. And now you saw a rapid decline in the Argentinian peso, the Turkish lira. You saw the Indonesian rupee, you saw the Sri Lankan and Indian rupees. All these currencies are struggling. What is making them struggle? People are not really looking at the underlying mass amounts of debt that we built these currency systems upon. And that's where it comes in, where we're going to talk a little bit about what could happen to the gold-silver ratio. I have a hard time seeing actually gold and silver being used massively back into circulation because we're so highly technological, unless we have a massive event happening where all technology gets disrupted, a massive solar storm or something. Then it would be pretty good to actually have some security.
When the centrally planned cashless society comes crashing to the feet of the IMF, then we might be pretty well off having gold and silver. And before anyone says it, no, you cannot eat gold and silver, but you can have food, water, shelter, self-defense, and all that stuff, and then have gold and silver. It plays into a bunch. It's not all gold, it's not all silver, it's not all self-defense, it's not all, food, it's not all water or shelter. All these things play into each other in the survival of mankind and the prosperity.
Yeah, and you can accumulate gold and silver and have that as an insurance. And throughout that time, if things collapse and you have that peak value of gold and silver where the gold-silver ratio is super low, then there's other assets that are super undervalued. You could jump into those assets. You could buy real estate. You could do anything. And that's what happens throughout these cycles. When you have a massive currency reset, you suddenly have that ratio just jumping through the roof, Josh. And then what happens is one asset that was massively undervalued because there was so much debt used on it, like real estate, that could just plummet. And then suddenly, it could take you as little as 200 ounces of silver almost to buy a single family home. So think about that. That is what could come out of this, because of course now today we got another player in the game, which is of course cryptocurrencies, that also is kind of a wealth insurance in the way that you can move your money out of the system and you putting it into something electronic, which we talked about the safety of that, with the worst case scenarios. It's not good, but it's another way of moving away from the system, and that's what gold and silver is today too. It's moving out of that banking system, replacing your own power back to yourself.
Yeah, sure. And we have to make the decentralized word as clear as possible for those watching, because of course most cryptocurrencies are terrible, but some are changing the world forever. And I mean, Bitcoin is based in scarcity, application, use, demand, very similar in the sense that it's based in subjective value and whether it's useful or not. I'd say gold probably has more use case long term when you are trending, when you are looking for trends. However, I do believe Bitcoin will stay around for quite some time, and it's innovative and it will lead to new, greater things in the market. And of course, there's alternative internet, alternative grids being propped up as well. So in the case of, a massive power failure, I mean, we could look to solar flares, stuff like that can cause huge issues. But I think that this idea that it'll forever be gone or it'll be gone for a long period of time probably isn't likely. And I think that off the grid, we can create new grids, ironically enough, to actually replace a lot of the old ones.
Well, if you had a solar storm, people ask me, what are you going to do with your Bitcoins or cryptocurrencies? I said, just put your ledger, your wallet with the blockchain onto a USB, put it in a Faraday cage that protects from all frequencies, and then you're fine. You just need to say one of those blockchains, Josh, and then you have everything that was ever transacted. So,
well, it won't destroy the blockchain. There's no doubt about that.
Yeah. There's always going to be, and the government trying to ban it is even more stupid, because they believe that they can go in there and actually remove the blockchain out of existence.
Interestingly, like the most cashless countries in the world have been attacking Bitcoin the most. So that should be a big red flag as well. But we have so many people that are like only gold, only silver, only Bitcoin, this kind of stuff, and attack each other. And it's absurd. I think diversification is incredibly important, and we have to understand how to diversify our wealth and protect our purchasing power in multiple ways. You don't put all your eggs in one basket. Though with that said, gold and silver have historically been very prevalent, and I think we should always be looking for ways to protect our wealth.
Yeah, and let me just finish this whole video up here, Josh, with doing some numbers on what could happen, if gold and silver were to, let's say that they instated a gold and silver, a gold backing again. There's a lot of countries out there, India, Russia, China, Turkey, Turkey, and a whole wide array of others that have been accumulating massive amounts of gold. Meanwhile, there's idiots like Norway and Canada that sold off all their gold.
And Venezuela, that's about to be out of gold.
Yeah, they sold off half of their gold already, and they're continuously declining to try to prop up the massive government that they
failed monetary system, and Russia is trying to double or triple their mining capabilities when it comes to gold as well.
Yeah. What the last thing I want to talk about is when the ratio reverts. So let's just take a look at just the recent reversion of what happened in the last crisis in 2007, which I think this one's going to be way bigger. But let's just use the conservative numbers of that time. And let's say that because of all the new monetary supply that's out there, suddenly somebody wants to go to a ratio, and let's just use 5,000 to start with, and let's say that the ratio goes to, what do you say, Josh? Let's do 30. About 30, that was where it bottomed out last time. And if you look at that, you're looking at the silver price being 166 ounce at that time, which is way up from 13. That's we're looking at about what is that, Josh? That's about 1,000 times higher. And then we can take a look at if it went up to, for example, 20,000, you can look at, and I'm going to use the conservative number of the ratio being 30 again. Well, 666, that's not a good number, Josh, but that's what the ratio would be if you go to about 30 when you have a 20,000 ratio. But at that time, you should be probably also worried about how much your fiat currency is worth, because even though the price is raised like that, Josh, doesn't really mean that the perceived value of them is any changed at all. It means that it's the same. It's just a currency that lost substantial amount of value. But of course, the gold silver ratio changes, Josh. That's where you can play the game. And maybe at that time, maybe it's a huge bottom when you get a huge cycle where it just cycles out, and you could buy mass amounts of real estate with your gold and silver and so on. But what you're going to understand throughout history, everybody used gold and silver to protect their wealth. And this is comes from the richest people in the world. They always has done this. They always know and understand that you have to have a minimum of 10%. A lot of people have even a lot more. Looking at Mike Maloney, he has about 50% of his wealth in gold and silver, because he really believes this reset is going to be massive coming up with this whole debt collapse that's going to happen. And we'll see, we're going to see some crazy prices in gold and silver, but that doesn't necessarily mean that, oh yeah, gold gained so much value, silver gained so much value. I would just look at the gold-silver ratio, and that should tell you where you're at with the value of your precious metals. And then when you look at it, back in the Greek Empire, it took to buy a nice toga about an ounce of gold. And then in today's, you can go and buy a nice suit for about the same price, a little bit less today because it's been pushed under and undervalued. But yeah, it's always perceived its value. And the gold-silver ratio, guys, it is, saying something today. It's at the current today. I'm just going to finish off with that and state that it's about 82, and it's at record highs again. And it's telling us something. It's flashing a red light saying, like, listen, guys, there's something happening here. Their undervaluation is so massive. And almost every time, about 80 to 85% of all the recessions, that is predicting that something will be happening, either a debt collapse or a market crash.
Yeah, absolutely. And it's happened every single time to every fiat currency, back all the way to 1024.80 in China. Almost 1,000 years. We'd think we'd learn from it since then. But and Robert Kiyosaki has been talking about how that's like the one thing he won't sell is his gold and silver. And it's really important. What are they doing? Why are the banks stockpiling? Why are these billionaires stockpiling? Why are so many stockpiling? Governments around the world, Germany, Russia, China. Why are these guys all stockpiling? They know something you don't, or maybe you do know, and maybe you already are aware of this.
Well, yeah, I was listening to Rob Kirby, and he said that people are capitulating, actually selling their silver right now. And that's right where they want you guys. They want you to give away as much of your gold and silver as possible because they want it all.
Yeah, the manipulation is pretty strong these days, and the media nonsense. I can't help but think of Anthem Blanchard, our friend, going on, these TV shows, and the interviewers are like, gold and silver, like it's the first time they'd ever heard of it. It's absurd. Anyway, Thanks for going into this with us, John. Hopefully you all learned something today from this video, and we will continue to do these videos just talking about or breaking down these subject matters to explain them in more simple terms for all of you. So thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth,
Be the change.
Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized by YouTube as they bring in the ADL to flag all of our content as hate speech. Also check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also check us out at Steemit at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in cryptocurrency, Steem that is. So don't forget to check us out there and find us at Anarchapulco 2019. I know it's early, but this is such an exciting event coming up with Ron Paul, Judge Napolitano, David Icke, Larkin Rose, Jeff Berwick, you know, all the usual characters, and it's going to be amazing. So we hope to see you there. Make sure to check the link for Anarchapulco below and use promo code WHAM to save as much as 15% on your tickets. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.